Morning guys, Joel Frank here, market analyst for YouTrading, and this morning we're taking a quick look at gold. So, what has been going on? Well, as you can see, I've got gold here on a daily chart, and just to recap recent price action, back in March we had this double bottom in the upper 1600s. We then had a pretty decent run throughout the months of April, pretty much throughout all of May as well. We went all the way from under 1700 to post highs. When were those highs actually? Were they at the end of last month or earlier this month? Highs at the first of this month, 1st of June, above 1900. Pretty good support we found on this trend line here, which you can see I've marked up with these circles. We had 3 touches on that trend line, but we've been consolidating in recent days and have since, or you can actually see if I zoom in a little bit, can I zoom in? You can see we actually broke below this trend line that had been carrying us higher since the 31st of March. So this kind of confirms that technically speaking, gold is in a bit of a consolidation at the moment, and the range that I'm going to be looking at as a result of this sort of technical confirmation that we're in a consolidation phase is I'm looking for support in the form of this previous high back here, which actually already came in as support yesterday. That was around 1840. You've also got the green line here. That is the 200-day moving average. That'll offer good support. This blue line here is the 50-day moving average. That'll offer decent support. So there's a few decent bits of support in this area from roughly 1850 to 1820. I'm looking for quite a lot of support. And actually, if we just zoom out quite a lot more, if you guys remember, there was this long-term downtrend that we were talking about for much of, for a long time over the last couple of months that we recently broke back above. That could come back into play around this area as support. To the upside, of course, we've got the recent highs, which are around 1910 roughly in this area. But to get above that, you can see I think we've formed a bit of a trend channel, a bit of a bearish short-term trend channel. Some would say it's a bullish flag, to be fair, a bit of a consolidation before another push higher. We're going to have to break above that as well if we're going to test these recent highs. So that would require something above this trend line. So fundamentally speaking, what's been happening to gold? Why has it been consolidating? Well, a lot of this price action we've seen in gold kind of mirrors the price action we've seen in the dollar. The dollar is off lows. I mean, the dollar's not doing amazing, but like I say, it's off lows. We've also seen a bit of a peak in inflation fears. Obviously gold is seen as a key hedge against inflation. But if you look at bond markets, basically inflation expectations, which you can derive by looking at the difference between nominal bond yields and inflation protected or real bond yields, you can derive inflation expectations from that. And inflation expectations, as shown from bond markets, have been declining over the last couple of days and are well off recent highs. So it looks as though, even though last week we had US CPI that was hotter than expected and the highest it's been in years, markets are less concerned right now about inflation than they have been. So that, plus the fact that the dollar's doing a little bit better, has weighed on gold, as you would expect. However, looking forward, to be honest, this area of support here that I marked up in the low 1800s, I do expect that will be, it would be difficult for gold to break below that, because first of all, on Wednesday, tomorrow, we've got the Fed, who are expected to be dovish. Basically because the labour market data in the last couple of months hasn't been as good as what they would want to signal a move towards monetary tightening. That is typically bullish for gold, or at the very least it's supportive for gold, okay, dovish Fed. And the other thing is, if you look at real yields, so like for example, instead of looking at the US 10-year bond yield, look at the US 10-year TIPS Treasury inflation protected security, I think is the what TIPS stands for. If you look at those yields, they are very, very low. And close to recent lows, and if the Fed aren't going to be tightening policy anytime soon, then real yields should remain low, and gold has an inverse relationship with real yields, so when real yields remain low, gold should remain supported. So yeah, basically my argument is, fundamentally speaking, things I think should keep gold supported. Now, is that going to be enough, the Fed and real yields, to push gold back up to the top of this range, and then perhaps to break above recent highs to test, where would it be? I think that's the annual high. Yeah, that's the high set on the 6th of January, and then the high from Q3 last year. Is that going to be enough? Time will tell. I think we need to just trade the technicals and observe how gold moves within this range, within these areas of support and resistance. But for me, gold should be supported for now. So I hope you enjoyed the video, guys, and I'll see you all in the next one.